In a significant move to address climate change and bring order to the voluntary carbon market, the U.S. Commodity Futures Trading Commission, CFTC, has introduced its first federal guidelines for unregulated carbon offsets. As carbon credits gain momentum as a tool to reduce emissions, these guidelines are expected to boost confidence and encourage more investment from the private sector. The guidelines introduced by the CFTC are designed to help exchanges validate carbon offset derivatives, which are financial instruments used by companies to balance out their emissions. By regulating these derivatives, the CFTC aims to promote transparency, prevent manipulation, and ensure that the credits traded on these markets represent legitimate emission reductions. Treasury Secretary Janet Yellen praised the CFTC's guidelines, emphasizing that they would help promote the integrity of the carbon credits, boost liquidity, and increase price transparency. Her support underlines the administration's commitment to transform the carbon market into a reliable mechanism for companies to offset their emissions while adhering to climate goals. However, despite this anticipated growth, the voluntary carbon derivatives market has struggled to gain traction with only a few contracts seeking significant trading activity. Concerns over the credibility of carbon credits have hindered widespread adoption and raised skepticism about their environmental benefits. CFTC Chair Rostin Benham highlighted the agency's dual responsibility to oversee both the derivative and cash markets, ensuring their health and transparency. The new guidelines aim to address some of the long-standing issues in the carbon market, including concerns about manipulation, price disorientations, and bad actors taking advantage of the system. One of the primary goals of the new CFTC guidelines is to eliminate market manipulation and price disorientation. The guidelines require exchanges to ensure that voluntary carbon credit derivatives comply with both the CFTC regulations and broader U.S. law. By enforcing these standards, CFTC hopes to prevent fraudulent activity and increase confidence in the market. Benham acknowledged that, given the scale of the carbon market, errors and manipulation are inevitable. However, with the new regulations in place, exchanges will have the tools needed to safeguard the market's integrity. This move is expected to help professionalize and scale the voluntary carbon markets, creating a more robust environment for investment and trading. The Biden administration has placed a high priority on improving the credibility of carbon markets. Carbon credits are seen as a key tool for attracting private investment into renewable energy and conservation projects. However, the market has faced criticism for not delivering on its promises. Some credits have been found to overestimate the amount of carbon removed from the atmosphere, leading to a lack of trust in the system. The new CFTC guidelines follow a series of efforts by the administration to strengthen carbon markets. Treasury Secretary Yellen unveiled additional guidelines for companies selling and buying carbon credits. And former U.S. climate envoy John Kerry launched a State Department initiative aimed at decarbonizing regional power sectors. These moves highlight the administration's commitment to using carbon markets as a mechanism to address climate change. Despite the momentum behind carbon markets, CFTC Chair Benham warned that the transition to renewable energy would not happen overnight. He stressed that the U.S. will continue to rely on carbon-based energy sources for years to come as the country gradually moves towards a more sustainable energy mix. This cautious approach underscores the complexity of the energy transition and the challenges that lie ahead. The CFTC's new federal guidelines mark a crucial step in regulating the voluntary carbon market. By promoting transparency, preventing manipulation, and ensuring legitimacy, of carbon credits. The guidelines aim to create a more credible and efficient market. As carbon credit market continues to grow, these measures will play a critical role in driving investment into renewable energy and conservation, helping the US and the world in the fight against climate change. If you found this video informative, make sure to subscribe to our channel for more content. Thank you.